Imagine being in ancient Rome. Currency collapse led to chaos. Citizens watched their savings evaporate. The once stable denarius lost its value. This sparked riots and desperation. Could this happen again? When currency debasement occurs, it erodes trust, wealth disappears, and society fractures. The stakes couldn't be higher. Are we prepared? The story of the Roman denarius is a cautionary tale about currency failure. It started as a strong currency, backed by silver, facilitating trade and military payments. Over time, emperors debased the coins, reducing their silver content to finance wars and public spending. This erosion of value affected everyone. Merchants struggled, soldiers were underpaid, and ordinary citizens felt the pinch. As trust in the currency faded, inflation surged, leading to economic instability. Ultimately, the very empire that thrived on its monetary system fell into chaos, showing how currency debasement can unravel societal foundations. What lessons can we learn from this historical collapse? Throughout history, gold and silver have emerged as steadfast stores of wealth, surviving the rise and fall of empires. Ancient kings hoarded gold while blacksmiths favored silver for its practicality. These metals proved essential during economic uncertainty. Unlike fiat currencies, which can be manipulated and devalued, gold and silver maintained their intrinsic worth. They provided security for those in power and everyday citizens alike. As civilizations crumbled, those who possessed these precious metals often fared better, illustrating their enduring value. This historical perspective underscores why, even today, gold and silver are viewed as reliable assets. How can we apply these lessons to our current financial landscape? Understanding how gold and silver behave during crises is essential for any investor. Gold is seen primarily as a monetary asset, a safe haven when economies falter. Its value often rises as uncertainty grows, making it a reliable store of wealth. In contrast, silver has significant industrial applications, making its behavior during crises more unpredictable. While gold may thrive in financial turmoil, silver can suffer if industrial demand wanes. This differentiation is crucial. Investors must recognize that, in a crisis, gold typically preserves wealth, while silver may fluctuate based on its industrial use. Knowing which metal to rely on can make all the difference. Which will you choose when the next crisis strikes? In Weimar Germany, hyperinflation turned the economy upside down, showcasing the contrasting roles of gold and silver. During this time, gold retained immense value. A single bar could buy a house. People turned to gold as a stable investment amidst chaos. However, silver had its own practicality. Everyday transactions relied on silver coins, which still held value despite the inflationary spiral. While gold was a wealth preservation tool, silver became essential for daily needs, enabling people to buy food and essentials. This crisis illustrated how, in economic distress, gold secures wealth while silver provides immediate utility. How will you navigate the next financial upheaval when faced with such choices? During the Great Depression, the U.S. government implemented Executive Order 6102, which mandated the confiscation of gold from citizens. This severely restricted its use. As a result, gold became inaccessible, leaving many to scramble for alternatives. In contrast, silver remained untouched and widely available, allowing individuals to continue everyday transactions. While gold was seen as a symbol of wealth and stability, silver's practical role shone through, enabling people to buy necessities amid economic turmoil. This stark difference highlights how silver provided a lifeline during a crisis, ensuring daily life could continue even when wealth was locked away. Should silver be a part of your strategy as we face economic uncertainties? The stagflation of the 1970s presented a dramatic landscape for both gold and silver. As inflation surged, gold prices skyrocketed, offering a reliable refuge for investors seeking stability. However, silver experienced extreme volatility, with prices plummeting by nearly 90% after the Hunt brothers attempted to corner the market. This stark contrast highlighted the unpredictable nature of silver during economic uncertainty, as it swung wildly while gold remained relatively steady. Investors faced a tense dilemma. Would they trust silver's potential for recovery or cling to gold's proven resilience? As market dynamics shifted, how do you navigate such volatility in your investment choices? The 2008 financial crisis marked a pivotal moment for both gold and silver. As the collapse of Lehman Brothers sent shockwaves through the global economy, gold emerged as a safe haven, climbing steadily in value as investors sought stability. In stark contrast, silver suffered a significant decline. This was driven by diminished industrial demand amid economic turmoil. This divergence in price dynamics showcased silver's vulnerabilities. While gold was a reliable store of wealth, silver's value plummeted as factories shut down. As tensions rose and uncertainty loomed, the critical question became clear. In an unpredictable market, can silver sustain its place alongside gold, or is it destined for further decline? During the pandemic, the precious metals market experienced significant fluctuations, highlighting the dual nature of silver. As gold surged to an all-time high, driven by its reputation as a safe haven, silver initially dropped to around $12 per ounce. This decline reflected uncertainty in industrial demand as the global economy ground to a halt. However, silver's recovery demonstrated its resilience. As markets stabilized, investors returned, recognizing silver's potential as both an industrial metal and an attractive investment. This volatility encapsulated silver's unique position. While it grappled with its commodity roots, it also proved to be a valuable asset during turbulent times. How will the lessons learned from gold and silver's performances shape our investment strategies moving forward? The gold-to-silver ratio serves as a vital indicator for investors, reflecting the historical relationship between these two precious metals. This ratio fluctuates, with high values often signaling that silver may outperform gold soon. For instance, when the ratio is elevated, it suggests silver is undervalued relative to gold, presenting a potential buying opportunity for savvy investors. Historically, periods of high ratios have preceded significant gains in silver prices, illustrating its potential for growth. Understanding this dynamic aids in timing investments and provides insights into market sentiment. How can this ratio refine your investment strategy in the current economic climate? For a well-rounded investment strategy, consider gold for long-term wealth preservation and silver for its practical use in daily transactions. Both metals play distinct roles in a balanced portfolio, allowing you to navigate different economic scenarios effectively. However, many investors overlook the importance of adjusting their allocations based on market conditions. As we face potential economic turbulence, understanding when to pivot between gold and silver can make all the difference. But here's the catch. What is the one critical aspect that most investors fail to recognize when strategizing their precious metals investments? Stay tuned as we dive deeper into this crucial insight. Now that we've explored the dynamics of gold and silver during various crises, we want to hear from you. How do you think these precious metals have performed in recent economic upheavals? Have your beliefs about their value changed? Share your thoughts in the comments below. Let's engage in a meaningful discussion about our experiences and insights. Throughout the crises we've discussed, gold has emerged as a safe haven. It safeguards wealth when economic turmoil strikes. However, silver's recovery patterns have been unexpected and noteworthy. After sharp declines, like during the 2008 financial crisis and the pandemic, silver has shown remarkable resilience. It bounces back as industrial demand recovers. This ability to rebound highlights an overlooked aspect. Silver can act not just as a commodity, but also as a valuable investment during recovery phases. Investors who recognize this dynamic can position themselves favorably as market conditions shift. How will you leverage this understanding in your investment strategy? Understanding historical performance is crucial for making informed investment decisions. This is especially true in turbulent economic times. By examining how gold and silver reacted during past crises, investors can gain valuable insights into their future behavior. Historical data serves as a guide, revealing patterns of resilience and volatility. These patterns can influence current strategies. For instance, gold has consistently acted as a safe haven, while silver has shown potential for rapid recovery after downturns. This knowledge empowers investors to navigate uncertainties with confidence. As we face new challenges, will you let past lessons shape your investment choices? Current economic indicators suggest a pressing need to revisit investments in gold and silver. As inflation rates rise and currency stability wavers, market trends hint at heightened uncertainty ahead. Investors are increasingly turning to precious metals as a hedge against inflation and economic instability. Gold continues to hold its status as a safe haven. Meanwhile, silver's potential for recovery makes it appealing amid fluctuating industrial demands. Ignoring these signals could leave investors vulnerable in a volatile market. Are you prepared to adjust your strategy to align with our current economic landscape? When diversifying your investment portfolio, balancing allocations between gold and silver is crucial. Different portfolios can cater to varying financial needs and risk tolerances. For conservative investors, a higher allocation to gold may offer stability and wealth preservation. Those willing to embrace more risk might consider increasing silver holdings. This can capitalize on its potential for significant gains during recovery phases. A mixed strategy could also work well. Allocate a portion to gold for security while letting silver capture opportunities in industrial demand. By tailoring your approach to your financial situation and goals, you can create a more resilient portfolio. How will you shape your diversification strategy in light of current economic conditions? Investing in precious metals like gold and silver can offer significant rewards. However, it's essential to remain aware of potential risks. Market volatility is a primary concern. Prices can fluctuate dramatically based on global economic conditions, investor sentiment, and geopolitical events. Regulatory changes can also impact the precious metals market, influencing everything from taxation to import/export restrictions. While these factors present challenges, they also create opportunities for informed investors. By understanding the risks and staying adaptable, you can navigate this market more effectively. As you consider your investment strategy, how will you mitigate these risks while pursuing your financial goals? Looking ahead, the future outlook for both gold and silver appears promising. Projected demand for silver is expected to rise, particularly due to its critical role in renewable energy technologies and electronics. As industries pivot towards sustainable practices, silver's industrial applications may drive significant price increases. Meanwhile, gold is likely to maintain its stability as a safe haven asset, especially in uncertain economic conditions. Investors can find hope in the resilience of these metals. Their unique characteristics can provide opportunities for growth. As you consider your investment strategy, how will you position yourself to capitalize on these emerging trends? In conclusion, maintaining a balanced investment approach between gold and silver is crucial for navigating the market's complexities. A well-diversified portfolio should reflect your financial goals and risk tolerance. This allows you to leverage the strengths of both metals. Regularly re-evaluating your portfolio ensures alignment with changing economic conditions and emerging trends. By incorporating both gold's stability and silver's growth potential, you can create a resilient strategy that adapts to future challenges. As you move forward, how will you ensure your investment approach remains balanced and responsive to the evolving market landscape? For investors looking to acquire gold and silver, there are several actionable steps to consider. First, research reputable dealers or online platforms to purchase physical metals or ETFs. Establish a budget that aligns with your financial goals. Ensure you allocate funds appropriately between gold and silver. Next, stay informed by monitoring market trends and economic indicators that may affect prices. Setting up alerts for price movements can help you make timely decisions. Additionally, consider consulting with a financial advisor to tailor your strategy based on your risk tolerance and investment timeline. By taking these steps, you can confidently adjust your holdings in gold and silver, positioning yourself for future success. Are you ready to take action? In conclusion, investing in precious metals like gold and silver is not just a strategy, it's a crucial safeguard in uncertain times. Their unique properties offer long-term benefits, providing both wealth preservation and practical liquidity. As we navigate an increasingly volatile economic landscape, the importance of holding both metals becomes even clearer. Gold remains a trusted safe haven. Meanwhile, silver's potential for growth can enhance your overall portfolio. By recognizing the value of these financial tools, you can build a resilient investment strategy that stands the test of time. Will you embrace the power of gold and silver in your financial journey? As we wrap up, let's remember the key insights we've shared. First, there's the enduring value of gold and silver during uncertain economic times. Next, we discussed the importance of a balanced investment strategy. Finally, we covered actionable steps you can take. By understanding the roles of these precious metals and their historical significance, you can navigate today's complex financial landscape more effectively. Thank you for joining us. Stay informed as you make your investment decisions. If you found this discussion insightful, don't forget to follow us for more updates and analysis on precious metals and investing strategies. Stay engaged as we continue to explore the dynamics of gold and silver in today's market. Your financial journey deserves the best information and insights. Let's navigate it together.